All the predictions of a protracted struggle to finalise the US election results in the end came to nothing. By the morning of the following day, it is clear that Donald Trump has won a close but still decisive victory over Kamala Harris in the race for the White House. What's more, the Republicans have taken control of the Senate and, while still not confirmed at the time of recording, stand a good chance of taking the House of Representatives as well. A potential red sweep then, and a degree of certainty delivered to financial markets that they may not have been expecting. What does it all mean for investors and for economies as well? To answer that, I'm joined by Tom Stevenson, Investment Director here at Fidelity. Tom, welcome along. I've been expecting, to be honest, that we'd be recording today with the results of this election still in the air, recounts, some legal challenges perhaps, but no, it's Trump again. Listeners may know the final results in terms of all the results that have been going on. We don't know all of them yet, but what's your immediate response to what we do know?
Well, I'm as surprised as you are, Ed, and I think lots of other people are surprised. It's not a great night again for the pollsters. I think the expectation was that this would be a lot closer and a lot less decisive than it actually turned out to be. Yeah, by the time we woke up in the morning, it was all done and dusted, wasn't it? I mean, I stayed up a bit and there wasn't a huge amount going on. I went to bed, woke up at 6 o'clock, and it was all done and dusted.
Yeah, I mean, and in fairness to this election is always tight, right? A two-horse race. I don't know, 90-something% of people are completely decided before, years before the election. Anyway, You're talking about small margins, but within that, there was a very, very clear result that perhaps wasn't expected. But the one thing they did get right, I think it's fair to say, the polls is that the economy was a big factor, consistently polled as the most important topic for voters. They really valued or put a high value on what was going on in the economy, or at least one facet of the economy.
Yeah, that's a good point and a key point that it was one particular part of the economy. It was inflation, which was really the driving force. And I think, one way of looking at this election result is that the American people punished the Biden administration for the spike in prices that we saw the world over. I think that's why it's slightly unfair of them to do that. I mean, this was a global thing, but the price of petrol, gas, as they call it, and the price of food is very important to American voters, and Biden, and therefore by definition Kamala Harris, paid the price for that.
Yeah, I mean, you didn't say it, so I will. It's the economy stupid.
Yeah.
This is where we roll out that phrase. And listen, we had an election here in the UK a few months ago, and maybe you could say a similar sort of thing in hindsight, about the economy. There's a discussion to be had about the actual control that executives have on things like inflation. But they definitely paid the price.
Particularly when the inflationary surge that we experienced over the last couple of years was such a global thing. It was really outside the control of domestic politicians, I would suggest.
Yeah, and if you look at the economy more widely, and growth, I suppose, is the sort of the measure you reach for. The last 4 years in the US. It's not been soar away, but it's been basically a bit like the 4 years that preceded it under Trump. Obviously, with the pandemic in the middle, sort of spanning the two presidential terms, but basically around 2 and a bit % growth annualized. It hasn't been a disaster from a growth point of view.
No, I mean, if you were expecting the vote to hinge on the performance of the economy, then I think that you wouldn't expect the incumbent to be punished in the way that they were, because the American economy has actually been a lot stronger than most people expected. I mean, I think most people expected that with the sharp rise in interest rates that we've experienced over the last 2 years, then there would have been more of an impact on growth and employment than there actually has.
Yeah, and as you say, to return to that point, the thing that is far more tangible to people is the prices they're paying. And particularly if there is a political element, if that can be attached to the party of power, because sometimes it isn't, but I think in America it absolutely was. People, that's very tangible thing that people can latch onto and punish a government for.
Yeah, and I do think that there will be quite some significant soul searching within the Democratic Party over their handling of the last 6 months or so. I mean, you could argue that in a way, they gave the election to Trump in a way that Biden was very slow to pull out of the race.
Yeah.
Kamala Harris really was an unknown quantity. When you think that she was the vice president, she hadn't really got the kind of profile that you would have expected of someone who'd been in office for 4 years.
Yeah, it was a hard situation, wasn't it? In fairness, Biden's decline, if we can call it that, and then they had to make that call. Do you go for someone completely brand new, probably even less name recognition than Kamala Harris? So, a difficult set of circumstances, but it hasn't worked out for them. Let's unpick some of the other market reactions to the result. Take us through what's been going on in various parts of the financial world.
Well, I think the financial market reaction was pretty much as you would expect. I mean, people have talked in the run-up to the election of the so-called Trump trade. This is the expectation that some of the measures that would likely be implemented under a Trump administration would be sort of very pro-growth, and that we've seen growth assets, risk assets respond very strongly. So stock markets have been strong. They've gone up. Mm-hmm. Not everywhere in the world. We'll come on to that maybe. I'm thinking about China. But in most major markets, stock markets have gone up. The dollar has gone up.
Yes.
And bond yields have gone up. All of those are in response to the expectation that there will be, an expansion of the economy, more growth.
Yeah, and that point about the dollar, because lots of things kind of flow from that. The market is essentially saying that if you get a kind of full-on Donald Trump agenda, that's actually likely to be inflationary.
Yep.
Ironic, given what we've just said about voters and inflation, but that's what they think. He might cut taxes, that could be inflationary. That would lead to higher interest rates, and that would be a strengthening force for the dollar. So that's kind of what the market assumes is going to happen.
Yes, they do. I mean, almost all of the measures which Donald Trump is expected to implement, and there are big question marks about, the gap between the rhetoric and what he will actually deliver, not least because, as you said at the start, we don't know the outcome of the election in the House of Representatives. And that's really important because, if we were to get what you described as a red sweep, so Republican control of the White House, the Senate, and the House of Representatives, it makes it much easier for the president to push through legislation, far-reaching measures, which he would like to do. Without the support of the House of Representatives, it becomes much more difficult. It's a check and balance. The American system is almost expressly designed to make it difficult to push big changes through, which can be a good thing. So if the Republicans do get control of the House of Representatives, then I think that we can expect more far-reaching changes. And I think what we're talking about is possible tax cuts. Possible imposition of tariffs on imports, and particularly on Chinese imports. I mean, some of the numbers which have been talked about, 10 to 20% tariff on all imports and a 60% tariff on Chinese imports. Now, obviously, these numbers are a starting point. They're a negotiation. We shouldn't take them too seriously, the actual number. But tax cuts, tariffs, and also the third element is a promise to slow down immigration, or indeed to stop it altogether, and to deport people who have arrived in the US. All three of those are potentially inflationary.
Yes.
Tariffs will push up the price of goods. They will be passed on to consumers. Tax cuts will give people more money to spend. That's inflationary. And if there are fewer immigrants, then there's a smaller labour force. That is also inflationary.
Yeah, which all raises a question about the likelihood that they're delivered those changes. I mean, something like, clearly, he's spoken about mass deportations. I mean, that's a sort of Pandora's box. What does that look like? But say immigration is lower, that would be inflationary. That's presumably going to be something that might dissuade him from being quite as full on in that sort of area. It's a sort of a contradiction in his policy position, isn't it? He knows his voters will want that, but also he knows he's just won an election because inflation has been very high. It's whether or not that translates right within.
Yeah, and as ever with Donald Trump, there are inherent contradictions in a lot of the things that he says and promises. He has promised to end inflation, and yet most of the measures that he's talking about would likely be inflationary. So you can't have both. Something's got to give, and so I think, and we saw this in the first term after 2016 that some of the sort of more far-reaching changes that were expected were kind of watered down, and we didn't see them.
Yeah.
It's likely that this will be similar. Although I think that this term is different from the first term. He's done it before. He knows what he needs to do. He's not sort of feeling his way in the way that he was in that first year of the first term.
Yeah, and there's a question about whether he's going to reach for any, or is going to welcome in any kind of moderating forces in terms of personnel that he surrounds himself with. He sort of did have that, certainly for the first part of his last term. Not quite the same this time.
Well, I don't think he'll feel any obligation to do that. I think he knows the people he wants to surround himself with.
Yeah, and looking at stock markets specifically, a big bounce, as you said, there, all over the place. There were lots of different stock markets, as far as I could see, checking before we came in today. What's the logic behind that market reaction, do you think?
Well, I think within the US market, particular sectors and parts of the market did well, and not surprising. Smaller companies, the market hasn't opened yet as we speak, but the Russell 2000 index, which tracks smaller companies, is expected to open quite materially higher, and higher, that fits in with the tariffs piece. If more stuff is going to be made and sold within the US economy, that should be good for domestic companies. Banks have done very well, and that's partly related to the interest rate question, because inflation is going to be higher, then interest rates will presumably stay higher for longer. That tends to be good for banks, and banks also just respond well to a growing economy. And other areas which might do well, be expected to do well, energy companies, although actually the oil price has fallen, and that's perhaps a consequence of the Donald Trump's encouragement of more domestic oil production, more oil, lower price. So it is a mixed bag. There have been negative impacts as well, not specifically within the US market, but he's been very vocal on the clean energy front, and some of the European companies, Danish turbine makers, wind farm developers, saw very big falls in their share prices. One of the biggest winners, of course, was Tesla. Elon Musk is, he's an interesting character in this whole Donald Trump story, and one that we probably don't fully understand what his role is. But clearly, just on a purely economic level, tariffs on imports of Chinese electric vehicles is good news for Tesla.
Yeah, and just on the rest of tech as well, there's a sense, isn't there, that it's hard, it's all vague, but that he's pro he's pro tech. He won't constrain tech in the way that maybe a different kind of administration will do.
Yes, I think he is. I think he is anti-regulation. I mean, he's seen as a deregulator, and some of the threats to the technology sector are around the whole regulation question to curb the power of the big tech companies. He's probably seen to be less likely to do that. The other big winner, of course, was Bitcoin. He's seen as very pro cryptocurrency. Saying that America is going to be the sort of the engine room of the cryptocurrency going forward.
Yeah, and what's so hard about all these things is that we can say, well, this seems to be how it is right now, but these are not. Let's face it; these are not ideological positions that he holds. These are sort of transactional, personal things. And if the transaction works for it, it will happen. And if the personal relationship works for it, it might happen. But it's not an ideologically driven thing. So things can change under Donald Trump.
Yeah, I think that's a really good point to make, because I mean, Donald Trump is not a man of principle. He's a pragmatist. He's a deal maker. And the Chinese situation, that is we don't know how that's going to unfold, because it's entirely possible that Donald Trump will strike some kind of trade deal with China if he sees it as being in the interests of the United States. And so it may not work out as we expect at the moment.
Yeah, and just elsewhere on financial markets, bond yields rose. We've got a Fed decision this week, and we're expecting 1 quarter point cut, I think.
Yes, that's correct, yeah.
Which probably won't change as a result of this election. But the chance that rates stay a bit higher, again, it's that inflation story.
It's related to that inflation story, yes. I mean, if you think that inflation is going to be a bit higher, then there is less scope for the Federal Reserve to cut interest rates. And actually, I think this is going to be interesting to see how this unfolds, because I think the independence of central banks is a basic tenet of how modern economies are run. And Donald Trump is very vocal on what he thinks the Federal Reserve should be doing, and it'll be very interesting to see the extent to which he attempts to interfere with that process.
He would love lower rates, yes.
He would love lower rates, but again, the contradiction is there. Many of the things that he is likely to push for argue in the opposite direction.
Yeah. All in all, this is quite a positive picture from a purely investor's point of view. But clearly Trump does bring some risks as well. Where do you see potential downsides in his re-election from a market's point of view?
Well, I think there are a couple of things. I mean, one is just the general uncertainty that he brings. He is unpredictable. What he says is unpredictable. What he's likely to do is unpredictable, and markets tend to dislike that kind of uncertainty. I think the geopolitical uncertainty that he brings will require caution on the part of investors, because we don't know what's going to happen, whether that's the Middle East or Ukraine or Taiwan or any other number of international arrangements. Those are less certain than they were. And then I think in purely economic terms, I think the measures that he is expected to implement, I think create bigger deficits. The US is already heavily indebted, and how sustainable is that going forward? That's a risk.
Yeah, I think he is instinctively pro. He wants the stock market to do well. I think it's one of the things you can see. He's got a track record of this. He points to the stock market as a kind of barometer, a scorecard for how well things are going. So he sort of will want to keep that buoyant. But the reality is markets are starting from a high starting point at the start of all this. You mentioned geopolitics. I mean, you can't be certain what will happen, but that could be a sort of big unexpected event, for somewhere in the world. We've got situations in the Middle East. You've mentioned China, etc. Trade with China and China's relationship with the rest of Asia. It's if something happens in that sort of sphere, that could knock markets off course in a big way from a global economic point of view, right?
Yeah, I think both of those are important. You know, you mentioned the valuations. I think, you know, the market has been going up for 15 years, and in particular in the short term, it's been going up very strongly for the last couple of years. So it does start from a high point. High valuations in themselves are not necessarily a trigger for a change in direction of the market, but coupled with events,
Yeah.
you know, that is a bad combination. If something goes wrong and markets are expensive, then that's a reason to think twice.
Yeah, and you know, we've got 4 years of Donald Trump, but that will be the final 4 years, unless something very unexpected happens.
Yeah.
And you know, these situations around the world, you know, if there's you know, counterparties to the US that see this as a sort of window and a closing window to take advantage of or to use that relationship with Trump, then we have to expect some volatility in that backdrop, don't we? And yeah, that's where, you know, investors need to be cautious. There'll be lots of, I think, chasing up this Trump surge. But you know, whether it lasts is a different question.
I think that's probably the main takeaway from the last 24 hours is that we now face 4 years of uncertainty and unpredictability and potentially therefore volatility. So therefore, I think the way that we manage our investments needs necessarily to be a little bit more cautious. You know, we need to think about things like, you know, diversification, to cover ourselves against eventualities which we can't predict.
Okay, indeed. Well, let's leave it there for now. Tom, thanks an awful lot for joining me.
Thanks, Ed.